5 minutes before the market closed at 3:55 p.m., we detected unusual options activity on General Electric, ticker symbol GE, today, October 3rd. And so in this video, we will analyze what this could mean for GE stock and show you how we are trading GE based on the unusual option data. So let's get right to it. These were for the November 3rd expirations, the 109 strike calls and the 120 strike calls. And we can immediately calculate the value of this trade by looking at the price here. We can see that they bought for $3.93 and sold for $75. So $3.93 minus 75 is the cost of the trade, $318 times 3,000. So this is $954,000. Okay, so this trader has to have this amount of money to trade. So it's not quite $1 million yet, which is usually the wealthy traders that we follow for our member trades, where their price predictions are a lot more accurate. So if you are interested in getting the data for $1 million trades, make sure to join our membership by clicking the join button on our channel homepage. Now, what's very unusual about this trade, despite it being less than $1 million, is that this expires November 3rd. And we know that earnings is coming up on October 24. So that's just 3 weeks away. And so this trade was done 3 weeks prior to earnings, and which is telling us that it could possibly be an insider, right? So if that's what you think too, comment below, what do you think? Because insiders don't necessarily trade right before earnings because that increases the risk of them getting caught. Okay, so when we take a look at the option chain, this is 31 days away. We can confirm that these trades were opening by looking at the 109 strike calls. We see the volume, the 3,000 here. Open interest was 0. So if it's 0, then that means that these are definitely opening. Same with the 120s. There was only 23 that were open prior. So we know these are opening trades. We believe they bought the 109 strike calls and sold the 120 strike calls. And you can see that this trade, when we analyze it, GE is at 107. And so as the price goes up on the x-axis, you can see that the profits increase. And as it goes down, it decreases, because this is a bullish long trade with a positive 34 delta. Okay, and so the way we are trading it is not exactly like this trade here. Okay, we wanted to give ourselves some more time, and we can go over our trade now, which is right here. We went to the November 17th, that's 45 days away, so a little bit more time. And we bought the 115 strike calls, that's our position, and we sold the 120 strike calls. So it is a vertical call spread, cost less than the unusual options at 112 per trade. And you can see that we have a positive 12 delta, so it's bullish going long, and we have less of a theta decay, -1. And by going out further in time, we can reduce our theta risk. And so that's why we like this trade better. And we also have a risk to reward ratio. You can see here we are risking $112 per trade, right, if it goes down. And we can potentially make up here 388. You can see at the left side, 388 is the max profit at expiration. Okay, so 388 divided by 112 means our risk to reward ratio is 1 to 3.46. So we could potentially make 346% profit here. Okay, so we like that risk to reward ratio. And so that is what we think about the unusual options on GE at the last 5 minutes of the market today. Very unusual. Comment below, what do you think? Is this an insider who is placing this trade 5 minutes before market closing? Or what's going on? Do you think GE is going to go up from here? Comment below. What do you think? And as usual, subscribe if you haven't. Hit the bell icon if you want to be notified of unusual options activity. And join our membership if you want access to exclusive videos of this type of data valued over millions and millions of dollars, so that you can start beating the market